Rebecca Walser coming to you from the New York Stock Exchange, and I want to talk to you today about gold. Gold is something that everyone's been talking about. We've been really big gold bugs at Walser Wealth since 2020, and a lot of people are saying, oh, gold is past its prime, we missed out, or it's too expensive now to buy if you missed buying it. And I want to kind of remind you of the history just in the last year and kind of where we're at and why we are where we are. So if you look at November 14th of last year, we were at $2,541, $2,541.50 a troy ounce. Our highest close ever in the history of gold was $43.98, $4,398 a troy ounce, and that was recorded on October 20. I'm recording this video today on October 22nd, so just 2 days shy of our all-time high. And right now we're at $4,086.40, so we're still above the 4,000 range. But that being said, we parabolically jumped to 4,000. We didn't establish really support resistance at the 3,900 precipice or in the 4,000. We parabolically jumped from 4,000 to 41 to 42 to 4,300. So it doesn't surprise me at all that we've retrenched back to the 4,000 range. We could even retrench back to the 3,900, 3,800 levels. Why did we parabolically jump? That takes me to October the 10th. On October the 10th, the market routed on the cyber cryptocurrency side. And the reason for that was because China became protectionist about the rare earth minerals. And as they became protectionist, the Trump administration threatened additional 100% tariffs in addition to what the tariffs already are in place. And that sent the market routing. And the reason it routed is because we did not expect that kind of pressure on the price, and that kind of downward price pressure triggered automatic contracts to actually, sell. So you had a lot of sell. You had the largest sellout liquidation event on October 10th for cryptocurrency. And what happens is people have to raise money to cover their actual. So you'll have people liquidating gold to raise money to cover their crypto, or you'll also have people fleeing crypto thinking that it's no longer safe and I really need to go to not digital gold but to real gold. So that could also push prices up parabolically. You can also see that a direct trade war between the two largest nations, economies in the world, the United States and China, would also make people have a flight to safety and run to gold. So that is why we jumped and we just leapfrogged and didn't establish resistance or support at a lot of the tranche levels. And so retrenching back down makes a lot of sense. It's to be expected. It doesn't mean that gold has hit its peak and is down now, or it doesn't mean that gold is as high as it's going to go and it's too expensive to buy. And if you didn't buy into it, you've already missed out. Like I said, we've been big gold bugs since 2020. It is a hard asset, and it is one of the best asset classes to leverage while you're going through a multinational global economic currency transition that we are in the process of going through right now, moving away from traditional finance, which is fractional reserve banking, fiat currency, to what we would call decentralized finance, which would be the blockchain and specifically stable coins. So keep following our practice for more updates like this, and we thank you for joining us.